Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have a Bitcoin / cryptocurrency market update for January the 21st. Also going to go over some trading tips in this video like I've been doing the last couple of videos. Before I jump into the content for this video, please do me a huge favor, hit that thumbs up button. Make sure you subscribe to the channel if you have not already, and don't forget to check the description for a link where you can join the Patreon for just $7 a month. That gives you access to more frequent updates, gives you access to the Patreon-only Discord, and of course, helps to support the channel so that I can continue creating content. So, I guess I'm just going to dive right into it. Let's talk about Bitcoin first, and then we'll talk about some trading strategies. So, when it comes to Bitcoin, and it comes to what's going on right now, if you go to social media, which I've been really cutting out social media for the most part. I haven't been on Facebook a lot. I haven't been on Twitter a lot. But I did go on there today, just kind of looked around a little bit to kind of see what sentiment looked like. And, you know, it's the same old thing. It's the people that are, you know, they're always bullish. They were bullish in the bear market. They were bullish in the bull market. And they're just always bullish. And so because this market has always went up over the last 10 or so years, they feel like worst case, they can just buy a Bitcoin and sit on it and eventually it'll go up. And so those types of people are basically saying, you know, you'd be crazy to sell here because if you look at previous bull markets, 30% corrections were pretty standard affairs, and it would pull back 30% and then it would continue going up. Now, on one hand, I agree what they're saying is accurate. It really was the way these previous bull markets worked. If you go back and you look at 2017, we did get several corrections of 30 to 40%, and then price did keep moving up. And if you went back to 2017 and you didn't know that price was going to go all the way to $20,000, when it ran up to $3,000 in the summer of 2017, I remember this, I had just started trading, and a lot of people were saying that was the top, that was the new top. It was about 3 times or a little over double the previous all-time high, and a lot of people did get shaken out of their positions. So what's happening is you're seeing a large segment of people saying that this is just like that $3,000, you know, price in 2017. We're going to pull back. If you sell your Bitcoin, you're making a mistake, and it's going to go much higher. That's the theory. But I don't agree with them. I do agree that that is one possibility, and I think it's very important to be aware of that possibility, that this is just a correction that's long overdue. But there are some really, really key differences in 2017 and 2021, right? One of the biggest differences that I've noticed is that in these previous bull markets, you could almost set a watch, you know, and just simply watch for golden pockets to get tagged. They were often really good places to get long on Bitcoin, and you know, it worked out beautifully. Then when we went into 2018 into a bear market, you could do the opposite. You know, watch for the bounce into the golden pocket, look for short positions, and again, it worked out beautifully. So for example, on this pump up to $3,000 back in 2017, if you drew Fibonacci levels on that, you can see here that it just barely missed hitting that 61.8, which of course is the golden pocket. It closed right around the 50 fib, and then it had a trend continuation, which is, you know, what you'd expect in a bull market. And then from the July 2017 low up to the August of 2017 low, again, that put it up around $5,000, which was, you know, nearly 5 times the previous all-time high in, you know, back in 2013. It then corrected. It corrected hard. It took about 2 weeks or so, and it dumped down to, you can see here, a near perfect touch, just barely slid through that 61.8 level. That 61.8 was $2,988, and price slid all the way down to $2,975. So again, if you'd have been long there, it'd have been a really, really good spot to get long on Bitcoin. If we take a look at what was happening prior to that, it was these nice sustainable moves. You would go up for, you know, 4 to 6 weeks, then you correct for a couple of weeks, and you go up and correct and go up and correct. If you compare that to what happened in the last 9 or 10 months, we didn't have any significant corrections this entire move. Basically, from March until now, the price just went up, right? It never really had any type of correction. It would have these 10, 15% pullbacks, and back here we got like a 20% pullback, but no actual corrections. And so that's a really key difference, because you can see that our 61.8 is actually down on a non-log chart. It's way down around 18.4. You put it on a log chart, it actually changes at 9,600, which by the way is right where that CME gap is at. And those are really big differences. So even if this is just a correction, it wouldn't shock me at all to see this go much lower than $31,000. The other thing that people seem to be disregarding is, if you are going to look at Bitcoin and you're going to compare Bitcoin to how it behaved previously, then you've got to take into consideration how RSI and some other things looked. RSI in the past, it was a really easy line to... I had the hiccups as always. Didn't have hiccups all day until I started doing videos. But if you watch RSI, in the past bull markets, it would come down and test this 50 to 55 level, and then it would bounce back up, often reaching overbought conditions, then correcting back into the level, only to rinse and repeat over and over again. If you were buying at this level, this was a really easy signal to get long on Bitcoin. And when we went into the bear market, obviously it did what support does. It flipped to resistance. And then if you started shorting each time it came up to this level, you can see that you would have been short back here in February of 2018. You'd had a short signal in April 2018. You had a short signal in July of 2018. And by the way, if you're not lining this up, let me show you where these would have been at. Right here in February, you've been short right there in that candle. Over here in April, you'd have been short on that candle. And over here in July, you'd have been short on that candle. You seeing how perfect this is? This line, it's like a magical line almost. And what I mean by that is, it's a really strong line of support in bull markets. It's a really strong line of resistance in bear markets. Okay? We can see here that it acted as support in May. It acted as support in June. It acted as support in August. And each time, that was a really good place to look for long positions on Bitcoin. RSI right now on this weekly Coinbase chart is at 71.4. It's nowhere near that 50 to 55 zone. So again, if this is only a correction and it's not the start of a bear market, then that's what I want to watch for. I want to watch for this level to get retested. And then if Bitcoin is looking bullish, I might decide to go ahead and take some long positions, not just long trades on a daily time frame or weekly time frame like a 2 or 3 day trade, but a trade that I plan on holding, trying to ride the next leg up. Okay, I just think it's a little bit early to start saying, well, this is just a dip and you should be buying $30,000 Bitcoin. Obviously, everyone has to make their own decision on that. But that's really what I want to keep an eye on. I want to make sure that I'm sticking to the charts. I don't want to be operating off of out of a place of fear or a place of greed, right? I want to, use the indicators and use the signals that I know have worked time and time again on Bitcoin, and that's one of those signals. Another thing to really keep an eye on is if we start putting the Bollinger Bands on this chart, the middle of those weekly Bollinger Bands, it's down around 19K, right? So way down there. If we put this on a daily chart, our 50 moving average, it got front ran today, actually it bids just above it, but it was down around 28,096, okay? Our 200 daily moving average is down around 16.2, so we're still really far off of those. If we put a volume profile on there, we're going to find out that our volume profile from the bottom in March to the top so far in January, we're going to find out that our point of control is actually down at $9,418, nowhere near the price that we're at. Okay, we can see that there was no actual support built above that level. Very, very small volume being traded. First major support's going to be down around 12K. Okay, all these things come into play, and then perhaps one of the even rougher looking charts. Let's go back over to Bitstamp because it's got more history. If we put this on a 12-day chart, which is a chart that I personally use for position trading, right? I know other people don't talk about the 12-day chart. I've never seen anybody talk about it, but I've been using this chart for a couple of years now. And we can see that, let's put this on a log chart. We can see that in the summer of 2013, when RSI got extremely overextended on the 12-day chart, we had this monster spinning top candle, and then we had a major correction. And this correction, if you want to call it that, actually fell 82.65% in a 12-day period, right? Because it wasn't over here. It opened here, went way up here, and then dumped 82%. Next time we got super overextended like that was in November of 2013. It was followed up by a very similar 12-day red candle, and then price fell 86.9%. The next time we got overextended like that and then followed up with a nasty candle like that was in December of 2017. And again, we all know what happened, right? It fell 84.12%. And the summer of 2019, it got overextended, but not quite as bad. But again, it put in one of these, spinning top type of candles. And if we look, it fell 72.26%. So here we are again trying to put in, and again, this is a log chart. So this is, these candles are actually much more extreme, as you can see, but I'm putting in a log chart so that, you can get a fair comparison of these past wicks, these what I would call capitulation wicks. So we still have almost 3 days before this candle closes, and a lot can happen in 3 days. So I don't want to get ahead of myself. I've seen some bears using a monthly chart and, reading way too much into the monthly chart. We'll talk about that in just a second. I just want to say that this is something that I would keep an eye on, right? There are a lot more reasons to be bearish right now than there are bullish, right? Hopium is not a reason to be bullish. At the end of the day, it's kind of one of those things where I want to play it safe. I don't want to go rushing into this and buying $30,000, $40,000 Bitcoin. That was actually a mistake that I made in 2018, right? I started loading up down around $10,000 Bitcoin, and I kept loading up. And yes, eventually it did come up, and yes, eventually I did make some pretty decent money off of those plays, but think about how much more I would have made if I'd have just been patient and been buying down here versus buying back here. All right, so that's the 12-day chart. If we look at a monthly chart, obviously this monthly chart does look awful. There's no other way to put it. It looks awful, right? If you look at that wick, compare it to these previous capitulation wicks, there's a real problem, right? There is a real problem. But the other side of that coin is this is January 21st. There's still 10 days left in the month, or at least 9 full days. A lot can happen in 9 days. This could pump all the way back up here, and this candle could look totally different when it closes. That being said, if this candle closes that way, and again, if we're putting on a log chart, we can kind of compare this, right? That was a 29% wick. That was a 22% wick. And right now, this one's a 26% wick. The top in the summer of 2013, before the 80% drop, was a 46% wick, right? These are very, very large wicks. So yes, if this closes like that, that would be an extremely bearish candle. And it would be very similar to, somebody going long up here would be very similar to somebody going short back here on this March candle. Also keep in mind that people are expecting this just to stop at 30K or 31K and then just keep going up from there. But if you're looking at the monthly RSI is still sitting at 83.31. It's still not just overbought, but extremely overbought, right? This is a yearly chart. Now, again, we don't want to read too much into this candle when we're less than 1 month into a year. But it would make total sense if I was looking at this and this was, say, a 5-minute chart or an hourly chart. It would make total sense to come all the way back down here and retest this previous level of support, which is right around $13,880, right? And if you're measuring this from the bottom in 2018 to the top, that's just between the 61.8 and the 78.6. If you're measuring it from March, it's closer down to the 78.6. But again, this was a parabolic run. Parabolic runs tend to retrace not to the 61.8. They tend to retrace 80% of the move, right? So in this case, an 80% retracement would put this down around 11K or so. So these are all bearish reasons. Now, one of the things I wanted to do this year is try to give both sides of the coin. Guys, there is no in my opinion, right now, based just on the chart, there is not a technical reason to be bullish on Bitcoin, right? Not a technical reason. Even if you go down to the daily chart, you're going to see something that's very, very important. And I'm not seeing anybody talk about it. I'm sure they are. I just haven't seen them. But what we have here is a potential, right here, this was a potential lower high. Once we broke and closed below this candle here, which we did yesterday, that's a confirmed lower high and lower low. And if you remember, if you have a lower high followed by a lower low, that's a downtrend. That is a confirmed downtrend on the daily chart, which means the tides are turning. Also, if you're looking at this chart, this is a double top. Now, what happens on double tops? Double tops, more often than not, once they cross their neckline, they will have a dead cat bounce to retest that neckline. In this case, that would be up around 34,000, and then you get your sell-off. And we saw this back in the summer of 2019, right? We saw this double top right here. It came down, it retested the neckline right there. It had a move down. Then it had this really tricky bounce, right? Made it really hard to play, no doubt about it. This definitely did look like it could potentially be a bottom. But that aside, before that big fake move came in, we did have a significant move down, right? After the retest, we had another move down, and then the false pump, and then the real sell-off began, right? So if we go back to 2017, we really didn't have a very clean double top here. What we really had here is more of a head and shoulders type of thing that faked people out and again went down. See this? It's really nasty because it puts in a W. And it did the same thing in 2019. So, this isn't going to be the easiest thing to trade. If it starts acting that way, it's not going to be an easy thing to trade. It's going to look like this was a correction and that it's going to continue going up. And whether it does or not, we won't know. We won't know until it happens. And that sucks. That's unfortunate. I don't have a crystal ball, but all I know is that the price action has been incredibly similar to these previous tops, right? From the pullback, I could really go deep into this. I'm at 18 minutes, so I don't want to go too far with this, but let me just show you real fast. All right, so this was 2019, right? And this was the top. You had an initial drop of about 30%. We had 28% this year. You had a dead cat bounce of 37%. We had a bounce of 33%. You had a follow-up drop of 31%. We've had a follow-up drop of 28%. You seeing it? It is moving exactly like 2019. All right. So the next thing I want to talk about real quickly, because we're 20 minutes in and I don't want to do 45-minute videos. I just want to, give another lesson on trading. I'm putting these lessons near the end of the videos right now to reward people for watching. I'll probably mix it up and throw these into the videos as I do them. But one of the things that I really wanted to point out, and this is super important to understand, people look at a trader, or some people will look at traders and think, well, they have some type of edge where they're going to be able to tell me where this market is going. And the reality is traders don't really have much more of an edge than any random person. Okay, in trading, traders, they don't make money because they're right most of the time. They make money because they understand risk and reward. So for example, I might take, and it depends on the asset that I'm trading and what the market looks like. If the market's really going good and stuff, yeah, there are definitely windows of time where I'm winning 80 and 90% of my trades, right? There are also windows of time where I'm winning 50% of my trades. It really depends a lot on the market. But let's just say that I'm losing half the time for argument's sake, right? People will look at that and say, gosh, it's hard to make money that way. It's really not. You can be wrong 2/3 of the time and still make a living as a trader. And that's the thing that people need to understand, because when you make a macro call, kind of like last year, I said I didn't think it would break 20,000 before putting in a new low. Well, yes, that was wrong. But guess what? I'm wrong at least half the time, right? So that's really not a news flash. And just like now, I think this is probably going to go much, much deeper. At the very minimum, I think 20K, but I think more likely it's going to go down to 8 to 12K. when it's all said and done. I could be wrong in that, but it doesn't matter, right? It's all about risk reward. So let me just show you an idea of this. This is actually set up for stocks because I was talking about this in my private Discord the other day. But it's fine. It works the same with crypto. Let's say that this trader, right, takes 100 trades a month. And this would obviously be a day trade example. So, and if you're thinking, oh, that's a lot of trade, it's really not. Like when I'm trading stocks, I'm often trading the 1 minute chart. So it's not unusual to do, 10 trades a day, sometimes even more. But let's just say this person takes 100 trades a month. Let's say they only win 33% of those trades. That means that out of 100 trades, they lose 67 and win 33. If that person is using a 3-to-1 risk-reward ratio, meaning that they're going to make 3 times as much when they are right as they are going to lose when they are wrong, that person would still average about $21 per share. And if they're trading 400 shares, right, $21.11 times 400 shares, that person's still going to walk out making over $8,000 in this hypothetical situation, even though they were only right 1 out of 3 times. See, you don't need to be right all the time. You just need to make sure that when you are taking a hiccups are back, I apologize. You just need to make sure that when you are taking a trade, that it's a legitimate trade and that you know what your risk reward is going to look like. And some people say, oh, well, I don't do 3-to-1, I do 2-to-1. That's fine, right? So say that you're making $1 in this example and losing 50 cents when you're wrong, okay? Well, in this case, obviously that person would actually end up losing about $200, but let's say they increase their win rate to 40%. So they're winning 4 out of 10 trades, right? Boom, there you go. The same trader winning 40% of his or her trades, making $1 per share when he's right or wrong, or losing 50 cents when he or she is, wrong, making $1 when he's right. And there you go. You come out with an average of $10 per share, or roughly $4,000 a month, right? Now, cryptocurrency works the exact same way. Let's say that this person is taking 10 trades a month on Bitcoin, and let's say that when they are right, they're making, let's say, $200 per Bitcoin. And when they are wrong, they're losing $100 per Bitcoin. Well, you end up making about $200 net, right? And if you're trading, let's say your trade size is 1 Bitcoin, that's $200 profit, right? You're not going to live on $200 probably, but again, this is just a hypothetical example. Obviously, if you're trading for a living, you're probably going to be trading more than 1 Bitcoin at a time. And I would hope that you're going to make more than $200 when you're right. If Bitcoin's 30 grand, it's less than 1%, right? If you're doing 10 trades a month, those are probably going to be swing trades. Let's say that maybe more realistically, you're going to make $1,000 when you're right, and you're going to lose 500 when you're wrong, right? All of a sudden, if you're trading, say 3 Bitcoin at a time, $3,000 a month off of 10 trades, and that's losing 6 and winning only 4, still comes out as a profitable trader. This is the point that most people just don't ever understand. They go through trading with this incredible fear that they're going to be wrong. Well, what if I'm wrong? What if I lose money? Well, let me just go ahead and clear this up. You will be wrong, and you absolutely will lose money. The key is to make sure that when you're right, you're making more than you're losing when you're wrong. And if you're doing that and you're sticking to your stop losses, it's actually a fairly simple thing to trade for a living. The reason most people don't make it as a trader is because they don't stick to a stop loss. So they might take 10 trades like this, but maybe on one of these trades they think, no, I know I'm right. I'm not gonna close it. So then what they do is they let that one trade run wild, and they end up losing $5,000 on one trade. Well, now, just to break even, they've got to do another 10, 20 trades and win 40% of their trades just to make back what they lost on that one trade. And that's the reason most people aren't, successful at trading. It has nothing to do with being difficult. It's got everything to do with being disciplined, right? If you were disciplined and you always execute your stop loss the way you're supposed to execute it, you always, the best thing you can do as a trader, the first thing you should do after you open a position is put a stop loss on it. I mean, literally, the minute you open it, put the stop loss there and leave it alone. Don't start widening the stop loss. Well, I think it'll be okay. I'll just move it back $50, or I think it'll be okay. I'll just move it back a couple of percent. All you're doing is the cliche thing, which is, people have this tendency to close winners too soon and minimize their profits. And they have this tendency to let the losers ride, hoping and praying that they'll come back their way eventually. And that's how they end up blowing themselves up and getting liquidated and all this stuff. Somebody once said to me, "What do you mean you've never been liquidated? That's bullshit. Nobody's that good." And I'm like, "What are you talking about? Being liquidated doesn't mean you're bad. It means you didn't use a stop loss. If you're using a stop loss, you should never be liquidated, right? If my liquidation point says that if Bitcoin goes to 25,000, I'm liquidated, well, then I should have a stop loss that protects me from ever hitting that point." But anyway, I hope you guys enjoyed this video. That's my opinion on Bitcoin. I don't look for this to be a short-lived, hey, we touched 30K, we touched 29K, and now up to 50K from here. I don't expect that. I could be wrong. Obviously, I've been wrong plenty of times before. I would say that if this is a correction, that it will cut deeper and go much further down. Kind of like 2019, was actually a correction, a big correction, about 72%. I think that's much more in line with what a correction would look like. And of course, if it turns out that it's a new bear market, then, then we got to start talking about some even more, ridiculous sounding targets. But we're not going to do that just yet. We don't have any information that says this is a bear market as of yet. So that's my opinion on that. I hope this little tidbit about trading and how profit and loss and risk reward is really the key to being a successful trader and not being right all the time. I hope that helps and maybe open some eyes out there, and hopefully people take it to heart and make sure that they exercise extreme discipline with their trading. I think it'll help a lot of people in a lot of ways. All right, with all that being said, I'm going to go ahead and wrap up there. Please remember, I'm just some guy sitting in a spare bedroom. Nothing in the video is financial advice, and you should always do your own due diligence and seek out professional financial advice from a licensed financial advisor, which I am not, before making any type of investment in cryptocurrency, the stock market, or precious metals. If you enjoyed this video, be sure and give it a thumbs up. Make sure you subscribe to the channel. And of course, if you haven't already, make sure you check the description. There's a link where you can join Patreon for just $7 a month, where you get access to more frequent updates. Also, there's a link down there where you can join my trading course if you would like to learn my proprietary trade setups. This is James with Crypto Common Sense, reminding you to please trade safe.